Well, normally, the first Friday of the month, the Federal Bureau of Labor Statistics publishes a jobs number for the previous month. But we're not in normal times. We're in a government shutdown, so there was no official proclamation from the Bureau of Labor Statistics last week. But we do have this headline from Fox Business, David. The September jobs report is delayed by the government shutdown. What was it expected to show? And according to Fox Business, 55,000 jobs. Now, we have many resources for data and economic modeling and so forth. Does that track with our analysis, 55,000?
No, we're pacing at about 17,000 real jobs a month.
Oh, my goodness, less than half.
Yeah.
About a third.
Which is, it can be scary, right? We've talked about it with the population that we have in our country. We're looking for about 250,000 jobs created every month to continue to grow the GDP, grow the economic base, grow the economy, et cetera. But you go through these peaks and valleys where you'll have massive growth above those numbers, and we're in one of those times now where we're really in contraction in the job market, and that's due to the revisions and the way this data is presented. So again, are we really missing the data? No, because like you said, we have access to macro data from multiple sources, which are part of the inputs that give the BLS and some of the data you'll get from the government anyway. So our accurate estimates are usually pretty spot on, especially when you take out the revisions that come later. So we've lost 2 million jobs in the last 2 years due to revisions alone. That's more than any of the jobs created. So we haven't created a job in a very long time. What is interesting in the data is American-born workers have really received 100% of the jobs that have been created in the last 12 months, where foreign-born workers are negative almost 3 million jobs. So bottom line, though, whether they're American-born or foreign-born, that's somebody who's not earning a paycheck, who's not spending that money in the economy, and that is not a good sign for retail sales, for restaurants, et cetera. Without income, nobody's going to be able to spend any money. So it is of concern. Well, and if you just look at the job chart, that's when in the article, I don't think we have it on the screen, but you can just see a trend line sloping down, right?
Well, actually, the next item we have in our lineup right here is a chart you sent to the team from ADP Research. Companies in U.S. reduce payrolls for a second month.
Yeah, so the economy is tightening up. Companies are not spending on hiring. The amount of open jobs is now the lowest it's been in a very long time. There are now less job openings than job seekers. We haven't had that flip in a long time. So the one thing I would tell you is if you have a job, in the last 3 or 4 years, a lot of people were job hopping for the simple purpose of trying to get themselves a raise. And we just had statistical data come out. People that stay their employer have averaged an annual raise in the last 12 months of about 4.2%. People that switch jobs, it was about 6%. However, people that switch jobs are the first ones getting cut from these jobs. So maybe chasing a 2% increase in your annual pay may not be a safety, as good as it turns out if that job ends up getting eliminated, because when companies decide during economic downturns to cut people, they typically cut the most recent hires. So
better go with the bird in the hand rather than two in the bush.
And just, I would tell people to pay attention, because employers are looking to cut costs. And so make yourself indispensable. It's the first thing I tell every college kid. I'm like, look, how do you make yourself indispensable for the company you work for? That's how you provide value to that company, and you will be amazed how income follows in just that mantra,
Meanwhile, at the grassroots level, David, you shared with the team a chart showing consumer sentiment. And there's some strange dichotomy at play here, because the sentiment is cratering like it hasn't in about a half a century, but it doesn't necessarily reflect what's happening in the economy.
Right. Consumer sentiment measures where you and I as consumers, when we're surveyed, the University of Michigan has done this for years, where we think the economy is going to be basically looking out about 12 months from now. And it's very negative, right? Because people are bombarded with the negative news, et cetera. But their actual wallet, what they're doing with their wallets, tells a very different story. Retail sales, the same day that came out, were up year over year 4.8%, Chip, right? So that's a pretty strong growth number. Yeah. So people are still spending money, but they're just telling you they're scared they won't have any money to spend.
But the sentiment is down to where it hasn't been except for COVID, since 1952.
Yes. Again, and that is the way our media portrays the data, right? Because when you receive a paycheck and you pay your bills, your sentiment is not going to widely change. But when you're bombarded today, which you are, if you're on any social media platform, just go on there. And it's so much political hackness on both left and right of just bombarding you with negative messages. And that is what's showing up in the data. And so now what that means is, will people actually tighten their belt? Christmas is coming, right? Christmas season, the most important retail session of the year, is about to start. So we'll see what that data plays out. But right now, the consumer, what they're doing and what they're saying are completely two different things. Hey, if you're looking for more content like this, make sure you check out these videos. And don't forget to like, subscribe, and ring the bell so you'll be notified when we publish more content that will help you retire smart. Thanks for watching.